Hey, good morning, Mr. Grider. How are you, sir?
Hey, pretty good, Albert.
Good.
Good morning to you, and good afternoon to those in other time zones on the East Coast. And wow, I mean, we have an operations center based out of Tampa, and oh, and prayers and thoughts go out to all the families there that are affected out of power, right? So I think our operations center there does not even have power right now. So we have a limited staff. We do have two operations centers, as we've been on some of our webinars before. One on the East Coast in Tampa, one out of Santa Ana in Southern California. So we're able to service that and be able to take care of it, but kind of um, just going through these things with homes have done it. This is back to back in like 10 days, two hurricanes. And a couple years ago, I remember talking to one of our staff members that their home was really, I think it was Hurricane Ian that hit and kind of destroyed her home. Finally got it all rebuilt. And then she lives south of Tampa where the eye hit. So I got to talk to her and make sure she's okay. So, sometimes they're bigger than just, hey, what will we do in a business today? Man, people matter, right? And this is kind of why I got a non-QM, because non-QM, before that, there were no avenues for borrowers that didn't fit traditional guidelines. So, with that, Albert, we can move on to this, but kind of put it in perspective of what we're doing today into the light of there's a lot of people affected, even still dealing with North Carolina, all the way through there. So kind of
Yeah, I
be
mean,
mindful of that, right?
definitely. I mean, I think it was good news. I think I was watching the news this morning, and the governor was, DeSantis was talking about how it was it reducing the category down to a 3. I think before it hit land, that helped out a little bit, and some of the areas that were affected. So definitely, our thoughts and prayers are with those people that are in Florida that were affected.
Well, excellent. Well, let's begin and we'll kind of go through here. And then, as always, you're going to get a copy of the deck. And please put questions in the chat as we go along. We'll take any questions you have at the end.
Awesome. So, welcome everyone. Thank you again for attending another Home Express webinar. Today, we're going to be going over how to market for non QM. As always, we want to thank you for your participation. And some of the things that we're going to be going over today, as far as the housing forecast in 2024. Obviously, we know that we're in Q4, but nevertheless, just some key data points that we want to share with you. And obviously, we're going to be talking about our products and definitely how this could be potentially the marketing and how you can add it to your business model. As always, our presenters, Mr. David Grider, who is our Senior Vice President of Wholesale Lending. Myself, I'm Albert Martinez, and I'm the Corporate Trainer here at Home Express. And our special guest today, we have Mr. Greg Fairman, who is our Vice President of Sales in the Western Division. So with that, Mr. Grider, I'd like to hand
All
it off to you,
right.
sir.
All right. Thank you. Well, you know what I think we ought to do? I think we ought to start out with a poll, right? Kind of break the
I
ice here. And it doesn't have to be on business at all. So hopefully you got something for us, Albert.
I do. I do. I do. I'm gonna go ahead and throw this out and see what the masses think, right? So, which is the best 5-0 team in the NFL right now? Do we think the Chiefs or the Vikings? What say you,
Wow.
Mr. Grider? What do you
Well,
think?
we had this, we had this as a question a few months ago whether Kansas City is going to three-peat, right? And I said, no way, that's too difficult. So, given I've already answered that way, I'm going to go with the Vikings, man. The Vikings are it, right? Now, they're playing awfully well.
Well, the masses have spoken, sir, and it looks like the Chiefs. It
Ah,
looks like they think the Chiefs.
they got
Well,
more faith in the Kansas City quarterback versus Minnesota, right? I
yeah, I mean,
I, I can understand that, Chloe, but I'm going to stick to my guns and say that's going to be too hard to repeat for three
I
times.
agree with you, sir. I
But
agree
they
with
can
you.
do it. They're really good. So with that, let's go on and I'm going to go through a couple of slides here. There's probably not going to see them, but why, right? When I started and say, hey, how do you market for non-QM? How do you get more of this business? I'm gonna tell you it's about confidence, knowing your market and knowledge, right? And bringing that with a good non-QM company and more specific AE that can help you structure those loans. So when I go through this, it's like, why am I talking about MBA forecasts? Well, there's a couple reasons why, because we talked over the last three webinars on Why need to turn to non-QM? And for those that haven't, why? And it's really because it's a growing sector of our mortgage market, right? And it's because it's need-based. If you look at the rate and term refinances, we look at this, when are they going to happen? Well, I kind of put it on here where everybody's estimating that the rates are going to stay around 6%. Freddie Mac, I think, is the one where MBA gets it from. They're saying end of 25 is 5.8, end of 26, 5.8. So if you look at the locked in effect, I mean, where are we going to get these loans, right? And I get there's seconds for those that have, the 3% first mortgages, probably not going to be able to combine those two economically until the conforming rates get to 5, right? So it's going to be need-based type of lending. That's where they're moving. Maybe their job moves them. Maybe it's cash out needs for tuition for their kids or for other things, or they're looking at their portfolio and say, hey, given the economic factors, I'd rather bring it into hard assets, and we've seen a lot of that. So this is kind of why I do that, kind of say, why do it, right? So let's go to the next slide, and I'm going to share something with you. And I had this from the beginning of the year. MBA is not always correct, but we're forecasting, kind of rates. And I actually forecasted some small decreases from the Fed Reserve, more so beginning of the year, maybe a quarter in that. So I thought our volume would increase this year. And the beginning of the year, MBA forecasted it'd be almost a 20% increase to 1.95 trillion. Not the case, right? We're going to end up probably somewhere about 1.5 trillion. Even though next year it's going to go up. It's going to go up again from 26. I think the housing affordability is there. We still got some locked in effect, but I do believe non-QM, and we can see it, this will be a record year for our company and non-QM volume and several others because it's more need-based, and our partners, a lot have switched over to that, understanding that model and marketing for that. So if you haven't done already, understand that, hey, we can't control a lot of things, but we can control our knowledge base and getting together with a good non-QM AE, which, we would love to kind of partner with you on that. So I just kind of give you an example of like, not always correct on the volume, but if it stays kind of flat in those rates, it's going to be need-based. Let's take a look at the two products that I always say is kind of more makes up the non-QM of where these are at. So as we go into how to market for these. So when I first came into non-QM was 2015. Dodd-Frank came out the rules 2014 with ability to repay, how companies have to set things up. We looked at market segments, and the segment that was underserved was the self-employed borrower. And why? They have good accountants. There's a reason people go self-employed, right? And their tax returns don't work out through a lot of them don't work out through the traditional financing. So this just gives you a segment of how this is growing from 2021 through 2023 and beyond. So makeup is approximately 10-11% of the workforce are self-employed. And I don't know, I think it's even grown more over the last several years, given the economy and inflation. I think a lot of them have taken side jobs that are more 1099 or gig work, and they've been doing that where you could actually use those. So we can take them, let's say they have a W-2 job and they've been doing some gig work for the last 2 years. We're fine with that, using the bank statements to qualify on what work they have on that. And so we kind of see that segment growing in the economy. So it's a good segment. It's going up. And there's more studies on that too. I think most people, as you look at the studies of demographics, are looking for a little bit more control of their employment and income and want to have that flexibility that self-employed do. The other segment that we've seen grow, and this is probably empirical, probably see it all out there, and that's the small to medium investor, right? So let's take a look at that just for a little bit. And the reason I put this out here is kind of look at, if I go back maybe 3 or 4 years, there's probably a lot of institutional investors buying up a lot of properties. That's slowed down, where you have a bigger makeup of the small to medium investors buying investment properties to rent out long term and thinking, hey, what's my portfolio look like? We got stocks, bonds, but maybe hard assets where you need to go. You got gold, and a lot of them turn to real estate knowing that, hey, there's a inventory shortage. Even though we can talk about it all, hey, the demands fall down because we've got affordability. but there's going to be some equilibrium happen. Wages going up, rates, maybe insurance. We got to look at property taxes, all those things, and they're buying up some properties to on the small to medium investor as part of their portfolio, and it's strategically doing that through long-term rents, and maybe appreciation will be there, 3 to 5 years down the road. There's certain areas where it's not as great on the HPA side, but there's other areas that can. So we'll go to the next slide to kind of show you some little bit more data of where that share has come from. This is investor loans, nationwide investor share. You can see it where it's on the West Coast and the lower half of the United States. So if you looked at a map, which I think we have to, where you can get these loans from and don't have to be licensed, where maybe you can meet up with some real estate agents or investment groups to see what that looks like. That's just kind of a picture of where most of those loans are coming in from on the investor side. We'll go to the next slide, Albert. Just talked about income. Again, we've done webinars on this, but the self-employed, the most typical ones to be, to get down is the 12-month business bank statement. And those can be used for consumer purpose and business purpose, right? So if you do it on business purpose, we can do the self-employed bank statements, comes to a DTI file, but you get a little bit better rate, right? Talk about our asset programs and 1-year full doc options, right? That's I'd say 80% of that non-QM on the self-employed program, where you can combine the bank statements, W-2, or even in assets used for income. And then we can go to a little bit on the next slide is small to medium investor, just kind of going over some of the same things we had before. They're non-TRID, they're truly business purpose. And I caution you that really needs to be investment and rental properties, right? Even use cash out. The cash out proceeds must be used for business purpose. That's 51% or more, right? We do allow DSCR under 1 and below. Just got to make sure it makes sense, right, when we're doing that. But we do have a lot of states that are available with no MLS required, right, which is good. We can do lots of different properties on this, short-term rentals, condo hotels. You just got to be marketable properties, right, and legal. And that's kind of the thing. We can look at that, and we can look at a lot of loans there and have really streamlined conditions, and on these, they close them fast. So let's take a look at the map of where this is at so you can have that. So everything highlighted in black here are states that you do not have to have an NMLS license for to do business purpose, right? So kind of gives you a feel where you can go and market more for those type of loans. Maybe you have real estate agents that moved over COVID, they moved other places, so there, but you still have good relationships. Maybe investors that say, hey, probably not a good idea to invest in my specific neighborhood, but I'd like to get some rental properties. Maybe you can strategically look at these areas with them and say, I can still do those type of loans for those borrowers. So it just kind of gives you a feel for that. So again, you're going to copy the deck. So you'll have this data. All right. So I think before we go on, I'd like to know, Albert, what we go with ways to market for non-QM. What does our audience do, right? Maybe we could do another poll here, Albert.
I think you are absolutely right. Let's go ahead and let's ask the masses and let's see what they think, right? So, what is your preferred method of marketing? Is it social media? Is it direct marketing? Or is it purchasing leads? And this is a multiple choice. I mean, maybe you like all three. Maybe you just prefer one over the other or two over one.
Yeah,
Let us know what you think.
back in 1990 was here's a phone book. Start calling people. Maybe it's the phone book. I don't know, but I think it's done a lot differently now. I think a lot of it's in the social media would be my thing. If just relationship based, and I really think that is a key. I look at it. Your sphere of influence. How do you take that? So okay, you got the product knowledge. You know where to do it. How do you go capture more market share and get into this? It's about being centered and go, where is my next level of influence, and try to get that bigger, right? And I think that's more effective because then you can come across as professional, very knowledgeable. You're the go-to person for self-employed borrowers and small to medium investors, and have a system to get those done, right? So there you go. We got social media, right? So I think that's the way to go when I look at it. It's most effective. So start with the relationships you have now and get with those groups and network out. But with that, I'm going to hand it over to Mr. Fairman here to go through what he sees in his division with his sales managers, account executives, and broker partners.
All right, thanks, Dave. It's nice to be here. I'm excited to be here. Good morning, good afternoon, everyone. You can tell by my haircut that I've been in this business an awful long time. You know, dating back to the late '80s, and started my career more with a non-QM slant to it than anything else. And I'm excited to talk about where you're supposed to find self-employed borrowers. It's important that everyone takes the time on a weekly basis to think about business development, where they're going to market, you know, the areas in which they're going to find new clientele. It's important to think outside the box. No, you don't necessarily have to stick to the traditional methods. Maybe there's other avenues in which to pursue to find these borrowers. And you definitely want to associate yourself with people that have similar clients. That's really the key in my mind. Is you want to market and make new friends with people that have similar clients, and you can share referrals back and forth. So with that, we created a wheel of sorts that puts you yourself as the self-employed expert in the center, and then just talk about the different avenues. Right? You have the traditional real estate agent as far as a referral partner, which is fantastic and really the bread and butter of a lot of people. Social media, we just did the poll on that. Right? Whether it's going to be Facebook, Instagram, LinkedIn, different video outlets as far as creating video and other type of media content. Builders are another terrific source as far as self-employed clients might go. Oftentimes, builders aren't going to be willing to fund non-QM business on their own lines, and they're going to want to broker that out or refer it out to other clients. So, making friends with builders is another terrific source as far as finding self-employed borrowers. Business coaches. Now, this is something that might be a little new to you. These are folks that actually work with clients that have businesses. It could be a doctor or a dentist, and while they're trained in their specialty, they don't necessarily know how to run a business or have business development. So they'd be a great person to affiliate with as well, because they might have clients that need to get capital to buy another business, to purchase a home. You never know what you're going to come across. So it'd be great to reach out to maybe establish a relationship with a business coach. Same with a business broker. These are actually individuals that are going to work with clients that are trying to buy a business, potentially expand a business. You never know what their finances are going to be made up of, and they might need an influx of cash that they might be able to leverage, and you might be able to help being the self-employed expert. And lastly, financial planners. Right? This is a terrific source. These are people that help consult people in regards to their money, how to change their tax liabilities. They're going to work with a number of different self-employed clients. So it's always great to make sure you're affiliated and associating yourself with financial planners. You also want to have a CPA database to market to. Join a small business network, for instance, like BNI, that meet once to twice a month, exchange referrals back and forth. Those are terrific groups. And then lastly, you want to make sure you provide you're talking to your housekeepers, your pool person, plumber, contractors, handyman. You want to make sure everybody has a good understanding of what you do and what value you bring in regards to being able to service self-employed borrowers. This is something that not everybody's familiar with. Not everybody understands that this type of product is out there. And as Dave mentioned earlier in the presentation, that's really where non-QM was born from, because there was an underserved market. People, there were self-employed people that had great credit, equity, assets, but their tax returns did not support their lifestyle. So self-employed borrowers, people with bank statements, this is a terrific avenue. And these are just some different ideas in which to help source the consumer purpose loans. Let's go on to the next slide. And so the other segment opposite of the consumer purposes is where you're going to find investor borrowers. Similar ideas, right? You're going to want to work with your real estate agents. Social media. This is the most effective way and probably reaches the most people, and it's also the most cost effective. And oftentimes you don't have to pay to post on your Instagram or Facebook, LinkedIn accounts. You can manage that yourself. Commercial loan officers. So this might spur some ideas in your mind in regards to how to find some different sources of borrowers. These are people that are trying to buildings, leases, etc. They might have people that are interested in residential, right? Again, you're in the center of this. You are the investor expert. You're the non-QM expert as far as being able to offer financing a financing source to these folks. Business coaches, again, people trying to buy businesses. They're trying to coach people up. They work with a lot of self-employed people. Same thing with business brokers. They might be trying to buy a building, an apartment. They also might be looking to expand their portfolio as far as real estate. As Dave mentioned earlier as well, people want to diversify, right? It's not necessarily just going to be stocks and bonds or cash, gold. Some people are interested in growing a real estate portfolio because they see the value. Financial planners, again, terrific source. Same thing. People trying to round out their financial portfolio gives them, they're looking for sources in which to find these people and find funding sources. Property management companies are great ideas. Private or hard money lenders. Now, this is a terrific source in my mind because private hard money lenders predominantly make the majority of their money off the origination. So they're often, they have balloons and they're looking to actually re-lend the money out. So if they've had it on the books 12 months, they probably, would not be opposed to being paid off and being able to lend the money out again and collect some fees as far as the origination side. Create a team of realtors that to do investment seminars. This is often a hot topic in regards to, again, rounding out your portfolio, growing your wealth through real estate. And if you help educate people in regards to how they can do it, in regards to a qualification standpoint, not necessarily the traditional fashion, you're going to garner quite a bit of interest. Again, network with realtors in resort areas for short-term rentals. That in the last couple of years, that's really been a hot market in regards to short-term rentals. People that want to purchase rental properties, not on utilizing a long-term lease, but using the short-term lease and being able to get a daily rate, a monthly rate, especially in the resort areas, beaches, mountains, there's lakes. There's a huge demand for this, and actually it outruns, oftentimes can be double the amount you would get on a long-term lease. You'll have the opportunity to earn some more money. So these are just different ideas. Again, it's critically important to grow your business that you think about, strategically on a weekly basis as far as business development, trying to find new avenues, to find new clients, to bring and be able to kind of share your knowledge as either the consumer person or investor expert, to let them know that they do have different options out there. Not everything is just going to be a 20% down proposition. You might have with tax returns, pay stub, or W-2s, that bank statements are out there. DSCR is another avenue as far as qualifying. So it's exciting to think about. The next coming years are probably going to be, a lot of growth is in the non-QM space, and hopefully you all can take advantage of it.
Hey, thanks, Greg. Awesome information. Again, is Dak. And anybody wants some, I guess, more involvement from our account executive to go over some programs or how to market. We also have white labels available for marketing that you get with one of our account executives to provide for you in some of these programs, which could help, right? Just get your knowledge base up and help you market for that. I always get the request for, hey, give me some examples for recently closed loans. And so I'm going to throw a couple out here for you of what we see on the non-QM. So I'm going to go through like 3 of them, and then we'll take some questions, right? This was a purchase, state of California, self-employed. We used the bank statements. The tax returns didn't work, so we met the HR, used the 12-month cash flow of the business bank statements, and needed a gift fund. So we hit 100% gift with 20% down. They had 6 months reserves, limited payment shock. It's actually a really good loan. And so when you think of something, hey, there's no way I can get it done, gift's called again, 100%, 100% gift, right? And so it was on a self-employed borrower. So really outstanding type of, when you look at the credit features of this, didn't have much payment shock. That's the rent payment going to the housing payment. Next example. Here we go. Purchase state of Nevada, 600,000. Agents fallout due to DTI. Man, this is great. And they're trying to force it into Fannie or Freddie on tax returns. They have annuity and pension. They call us up. It's a fallout. And we just go through the loan real quick. If we do our calculations on assets, they have over 900,000 in assets we can use for our asset utilization or asset in full program. Done. Not even a DTI file. Great credit. Really easy loan, closed really quick within 15 days. So it's surprising. You're just kind of looking for the assets. And I say that a lot because if you can get the assets down, if you come into a DTI problem, if it's a DTI loan, you can also use assets for income, right? With pretty good numbers on that to really kind of drive it down. Maybe a 55, 60 DTI, but they have a couple 100,000 in retirement account. You can use that as income on the application for asset depletion. Next one to give you an example
Hey, Mr.
is,
Greider, we actually have a question in the chat.
sure.
It's from Rochelle, and it says, "What do you consider a payment shock?"
Well, I think we look at it this way, guidelines are one thing, but you look at something, and look at it going from, hey, I pay $1,500 in rent, and now I'm going to buy a $2 million house in California, and my payment with taxes, insurance, everything is 15,000. Those you really have to be concerned about, right? Is like that. So it's typically 3 to 1, right? But our guidelines really don't say, exactly what it is, because there's so many examples where I could give somebody where as a financial move, let's just say it's me and I'm going, hey, I'm going to live cheaply for 2, 3 years with a low rent payment and save a ton of money for my down payment. Oh, but my payment shock is now 4 times, 5 times what it is. I'm okay with that, right? What you need to look at as a payment shock, what could they afford, and they're making financial decision for. But a good rule to go by is 3 to 1, right? And that's kind of what I do. At least just ask the question, because we're a true lender. We have a right to our guidelines for our money. We also can make exceptions to them, right? So just tell us the story, and you'll be able to get those done, right? What you don't want is somebody that has a low rent payment, hasn't saved up any money, have a whole bunch of consumer debt, and then take on an extremely large housing payment where have never had that before. And that's just probably a little bit tougher to do. Again, we just need to look at the whole story, but that's kind of the kind of premise of it.
Thank you for that, Mr. Greider.
Yep. All right, next one, state of Florida. Oh, we had to have this one here, right? So again, not the whole state's affected, and everybody got to do inspection reports. We have a lot of loans there, and wish the best for everybody there. But this one was a fallout on agency due to condo blocks have partial leasehold, which, it was a rec area. We have no problem with that. It didn't affect the marketability to us. Full doc, it just went through really fairly easy. It just didn't fit the agency world, and just kind of show you example on a property type that we're able to do on a non-warrantable condo. So with that, I think we'll come up with some questions here, about 30 minutes. I try to keep them right about 30 minutes, so we can start some questions, and hopefully we have a few here, Albert, that I could address.
Yeah, Mr. Greider, it seems like we do just have a comment. It just says 3 times is something we can qualify. Thanks. Oh, Rochelle was just adding
Yeah, I mean
commentary to it.
I always say don't let that hesitate you, right? Say it's 3 times and you go strictly down this. I mean, non-QM is a critical thinking. Is this a good loan, right? And I can give you examples. I've done many loans that the payment shock was 5 times. Okay, I actually thought it was a great loan, right? And we did the loan, right? So it depends on what that borrower does, and what are they making the right financial moves, right? There's some areas where homes cost a lot of money versus the rent. And so if I'm going to a low rent payment and they're actually saving up, and you can say, hey, they saved up their own money over a year or two, man, that's a good financial move to get into that, and they can't afford the new housing payment. So I try not to put us in a box, but kind of have some like general guidelines out there to kind of look at, where you say, hey, maybe we just need to investigate it further, and does that make sense? This is what it is. And we're a common sense lender. That's what it is. Our first page of guidelines, right?
Absolutely.
Common sense,
Absolutely.
common sense, and then you get deal, right? So tell a story. So I guess we'll have my contact information here. Please reach out to me at any time. I've got my email if you'd like to have more of a personal webinar or Teams meeting with your group there at your office. More than happy to do that with you on any topic. Could be on DSCR, could be on self-employed, marketing, whatever you guys need to help you grow your business. That's what we're here to do. We're here to help you grow your business.
Absolutely. And I know that a question, there was a comment or more like a question earlier in the chat where it was asking if this information is going to be available online.
Well, Albert, I believe it is, right? And we put them on our
Yes, it is.
website and probably a piece of it on YouTube. I've checked with our marketing if they're really going to do that on this one, but and they are available. Plus, you get a copy of our deck. Everybody who's registered, all right? This will go out to you in the next 24 hours.
That is correct. Yep. Thank you. You're welcome, Lynn. Okay, so we do have a couple of great questions actually that are very marketing related. So one of them is, how much do brokers and LOs spend on marketing mortgage loans? What say you, Mr. Grider?
I'm hoping they spend a lot, and I'll tell you why, because it's a lot of it's what we do every day. If I look at that, say, it's like as me in the profession role I have, I wake up every day, I'm looking at the bond report, right? I'm looking at the economic data coming here. How can I strategize? What value can I give to all my customers, right? That's internal and external. And I think as an LO, you're kind of doing the same thing. You go up, I have all these customers taken care of. You got your current database that you have. You want to make sure you're rolling through that and doing all that. So you're asking them if they need any help, just to make sure you're in constant communication with them. And then you're asking them if you got any referrals, nobody else that could use some help. We're here to help you, right? And don't think that they're in a position where there's no help, because there are, right? And you just try to counsel them from that perspective as an LO. Right. And then you go out, right? And I love this. I think one of my other sales managers said this, like, think about how many self-employed borrowers you deal with on a monthly basis, right? And do they know that they could get a loan? Or did you ever talk to them about buying a house or where they're at? And just kind of care about them. If you really care, you should ask, right? I have a landscaping company comes by once a week, right? I do the major things, kind of cheap on that, but I want to make sure that the yard's taken care of and trees, that kind of stuff. They're self-employed. That guy who owns that landscape company is self-employed, right? Oh, the guy comes by in my pool. I live in Northern California. Yeah, it's still hot. It's been like 100 degrees during the day, and I have a pool. Well, I do most of the major stuff. I do have somebody come by once a week to make sure equipment's working, chemicals are correct, right? Oh, by the way, he's self-employed. I had new AC units put in a year and a half, 2 years ago, and he was a self-employed electrician. There's three people right there. And that's what I mean by your sphere of influence. Let them know what you do. Maybe they know somebody. You give them a card. Hey, and you personable, you like it, you got to generally care. That will come across to them, and your business will explode. It really will. It's doing the simple things of recognizing where you're at, right? And your sphere of influence, and that will grow from there. And if you do a good job, and that's why it's very important for us, you send us a loan, that we do everything we can to get that deal done and on time, because that matters on your reputation. And we get that, and we want to do everything we can to fulfill that for you. And so kind of just look at that perspective of, like, every day, what do you see, right? And so I think it's a constant marketing, but then you need some dedicated time, maybe for social media, whatever those platforms are, networking group, those type of things, with your real estate agents, meeting with them once a week. But so if you do a combination of all that, I think you're always marketing yourself.
Awesome. Thank you for that, Mr. Grider. Great answer, because it kind of plays into the next one, which was, how do I market myself as a new NMLO? And I think you've addressed that with, communicating with people that you deal with on a day-to-day basis, right? The
Absolutely.
pool guy, your gardener, and definitely that that reference that you could potentially get, right? So hey, they're doing some work at your house, you tell them what you do, and they could be, oh, you know what, I know someone actually that is doing whatever, right? So
Yeah, if you're a new MLO out there, bless you, man, coming into this market during this time. It's a great career. You have ups and downs, just like with any with any industry, but ours are more profound, right? When rates go down massively, the volume spikes, and then you're in the need base, right? Where, because no matter what's going to happen, people move, people get married, jobs move them, kids go through college. There's always a need out there for mortgages, right? So that's the good news. But as a new MLO, I mean, you really focus on everything that your sphere of influence and work out and kind of get yourself to be an expert. You need to align yourself. I don't know if you have a mentor, but man, if you got one of our AEs here, they can sit down and mentor with you on products on the non-QM side, kind of get you more up to speed with that, so you know how to talk about that, and we can help you. Hey, I don't have a question. You can get back to them, right, to whatever audience you have, and we'll help you with that information. But bless you for coming to market. I think we need more as we're going forward. You know, our population here, you know, especially with the immigration coming in, it's how we're going to deal with that. You're going to have a great need for great experts in the lending field to help out these borrowers. Now, we're wholesale, so we don't talk rate and term to a particular borrower, but we have the programs. We can understand the marketplace. We actually talk to our AEs every 2 weeks on market updates, what the bond's looking like, and the projections from CME on the 2, the 10s, and that. So they're gonna have a lot of information on that. So to kind of get you guys to just to be experts out there, is that coming across as experts the number one thing you can do.
Awesome, thank you. So we have a dual question. One first part is, do you provide any short videos that can be customized?
Great question. Me personally, with my haircut, no. I'm just teasing you. You know, I'd check for marketing with that. Maybe Albert, we can get their contact information on a short video. I actually think it's a great idea. I think I think our market department wants to come out with some of that and have explored that. And I actually think it's a great idea. It's just a quick, I think videos now today, what, 15, 20 seconds come across, right? You know, and I could see myself walking up there as a lunch here. I don't know how to get a loan. I'm self-employed, been doing it for 5 years. I have a great tax account. I can't get a loan. Oh, yes, you can, right? So I could see some cute things being done, right?
Exactly. And then the second part of that question was, do you have an online scenario pricing?
Yeah, we have a quick pricer on our website, so you can kind of put it in real quick, some basic parameters and get a price. And again, it's a quick pricer. It probably doesn't go into all the details once you put it in there. On our portal, even if you're not approved with us, we can get you access to our portal where it can have a little bit more detailed information on your scenarios. And you can actually save your scenario in there, right? And you come back and reprice it. You can do that. Maybe there's some changes to it, right? So yes, if you need that information on that, please let me know, or I'll let your AE know, and we'll get that over to you.
Awesome. And then also in the portal, Mr. Grider, they can actually, even though they're fully not approved yet, they can actually submit for an income calculation, and then
That's correct.
we can take care of that for them. They can see how quickly we provide those calculations back and how accurate we are with
That's
calculating
right.
that income.
So we try to take the guessing game. So you got a self-employed borrower, don't even have to have the property picked out. You can register the loan, even if you're not approved with us, and we'll calculate the income for you, right? And the other thing we have in the resource center, and we talked a little about the other products, is investment, right? The business purpose. We have a rental meter or retometer, whatever you want to call it, how to phrase that. We'll give you comps of what's out there to use to know your DSCR, kind of feel for that is out there. So it's not a guessing game. At least you'll have some basic parameters on it to where you think it should be. We try to give you a lot of resources on that. So especially these two products, that's probably 75-80% of non-QM are the self-employed borrower and the small to medium investor.
Awesome. And then I think one of the last questions that we have right here, Mr. Grider, is, should mortgage loan officers hire an agency to help with their marketing efforts?
Well, those are personal questions and a budget, right? I don't know. You know, that's really kind of a personal question. There's some great marketing companies that can help you do that. There's some companies that do it and do it very well. I'm going to tell you that can be expensive, right? If you can, it might be work. I don't have one that I could say, hey, these are some 3 or 4 companies I've seen that have done. But maybe you got a mentor or another company that you know to do it. I wish I could give you a definitive answer, right? Most of what we do, and I'll just give you an example for Home Express, right? We've been around for 9 years. This is our 9th year, right? 9th year, October, right? October 2015 when we came into thing. We did it organically, right? So we started out, okay, hey, we need to figure this out, make sure we have know what loans we're doing. Very small, we had a staff of maybe 10, right? 10 of us that were able to take loans in beginning of the year in March, and probably only did 30, 40 million that whole year, just figuring it out. Hey, we're just gonna go slow, small group, boom. Now you look at us now, we're doing 250 million a month, right? And it wasn't a big marketing thing, right, of that, but it's just taking care of customers, right? And a happy customer will give you referrals. I'm telling you, that's the best way. But how do you get that happy customer? You got to start somewhere. And that's where some of these market agencies can go. I would recommend maybe getting together with real estate persons. Hey, because you want to get some purchases, right? So, those are great to have because that's the database you want. That gets you going for the refinances in the future. Because every loan you do today, right, at 6.5, 7.5, or whatever that rate is going on, most likely is going to be a refinance in a couple years, right, of some sort, right? And so that gets your database set as you're going forward. So I would see if you could partner up with maybe a local real estate company. That way, sharing the expenses of purchases. But you got to watch out for, trade. You can't have money back and forth and that stuff they're giving people. But maybe, doing some type of activities. I think Greg talked about having some local investor web series, where hey, if you want to learn how to buy investment properties and you're looking at expanded portfolio, you have a real estate agent knows the market, talk to them, how the loan program works. That'd be your part as an expert. Those type of things can work. So those are really kind of know your finances and where to start with it.
Awesome. Thank you for that, Mr. Grider. And Rochelle also wants to know, is the rental meter on the same site as the pricing scenario?
On our portal, yes. You go to the resource center and you kind of pull it up. And what it is you put in, how many bedrooms, bath, and that kind of stuff, address, and then you just hit enter because you got to put your email address in, and within a minute or two, you get a PDF report of rental properties that of what they're renting for in that neighborhood.
Awesome. Thank you for that. So definitely, Rochelle, if you don't have access to our portal
Yeah.
yet, you can get with Mr. Grider or get with your AE, and we'll be able to grant you access to the portal so you can poke around, take a look, and then use the rental meter option. Obviously, the pricers on there for you. I think that's all the questions that we have today, Mr. Grider. Do we want to go ahead and close it out with some
Yep.
words?
Well, words of wisdom. Just thoughts and prayers go out to those that are affected in the Southeast. I mean, I think that's kind of where it needs to go. I mean, we talk about loans and all that, but lives, matter. I mean, just think, okay, it wasn't that bad. I mean, some of these homes they have to go in and see how the flooding is, deal with the insurance companies. That's probably another thing. Kids going to school. You start thinking about all the things that get affected, and you just wish the best for them to as they recover from this. And hopefully this is it for the year. Knock on wood that they get back to work. I mean, we have a whole center that's down, right? No power, right? I know a lot of them had to, move out of the greater Tampa Bay area to other places, and probably waiting for power to come back on to get to look at what they're at. So just thoughts and prayers go out to them and to our country, right? As we're going through a lot of differences, right? And that we're all here trying to get the same goal, being a good neighbor, helping each other out, and kind of put that first in our lives right now.
Agreed, sir. Well, with that, thank you, everyone. Thank you for your time, and we'll see you next month.